Hi, I'm David Bacaizo, Managing Executive for First Commonwealth Advisors. I wanted to take this opportunity to reach out to our clients, family, and friends during this unique time in our country and throughout our regions. Our hearts go out to all healthcare workers throughout the country and first responders. I wanted to let you know that our teams have been set up and are fully functional and operational and here to help. Now more than ever, it's so important that we live our mission, improving the financial lives of our neighbors and their businesses. Please do not hesitate to contact your relationship manager or any other team manager if you need anything. I've asked Lloyd Johnson, our Chief Investment Officer, to provide you a quick update and future outlook for both the economy and the financial markets. I hope to see you soon. I'll turn it over to Lloyd.
Hello everyone. My name is Lloyd Johnson and I'm the Chief Investment Officer at First Commonwealth Bank. I want to echo Dave's comments and say that our thoughts and our prayers go out to everyone watching or listening to this video. We did think it was important to reach out via this medium to do a few things, really kind of recap where we've come from over the last 30 to 60 days, where we are today, and what we see going forward over the next 3 to 6 months and beyond. As we sit here today, we're down over 30% in most equity indices, some a little bit more over the last month after that all-time high in February. We've seen increased volatility in most markets, fixed income as well as equity, commodities. We've seen more 4 and 5% moves in equity markets over the last 2 weeks than we've seen in the last 15 years. No doubt we've seen increased volatility. That part's not so unusual. We've seen that in the past. We saw recently in 2016 a spike in volatility. Certainly we saw it during the Great Recession timeframe of 07 through 09. Saw it before that in the dot-com bubble of 2000 to 2002, and really many other instances as you look back through time. And I think the one comforting thing to take away, and we'll show it in a chart in a minute, is that we've come through it. We always have. And so we prefer to believe in the United States and really believe in the integrity of the markets because they've always come through. We do also believe that over the next several weeks, there'll be an increased push on part of the government, both from a legislative standpoint in passing some stimulus legislation, and also from the Fed, as they made it known very clearly that they stand ready to provide liquidity and stimulus from their side on an unlimited basis, as they put it. So that's what we can expect from the Fed and the government. In the same way that it was important to keep in mind where we came from as we made those new highs only a month ago, I think it's also important to keep perspective on where we are today. And although we don't know where the ultimate bottom will come in, we never do. It's only clear to us in the rearview mirror. But we do know that we're over 30% off the highs. And at some point, as the markets always have, people will come in and buy as they see values in individual names, as they see value in overall markets. We do believe that. And finally, before I turn to a couple charts that really talk about the importance of staying invested and keeping things in perspective, I'd like to leave you with this thought that as we looked at our typical balanced account client in 2019, they were up around between 15 and 18% for the calendar year. If you looked at a typical balanced account this year in 2020, they're down about the same, 14 to 18%. And that's not great. That doesn't feel good. But again, in perspective, we're down in the first 3 months of this year in 2020 about the same as most balanced accounts gained in 2019. So with that, Let me turn to a few charts to finish the story. The first chart looks at various other health scares we've had going back over the last 2 decades, to include the SARS virus of 2003, all the way up to the current coronavirus of 2019, 2020. And as you can see, the market has rebounded strongly in all cases. The second chart focuses on how markets have rewarded discipline over time. It spans 50 years, going back to the oil embargo timeframe of the 1970s, the hyperinflation of the 1980s, all the way through the Great Recession timeframe of 2007 and 2009. And it really illustrates the benefit of the rearview mirror in looking at markets over time and how investors have been rewarded with patience. The final chart looks at a typical balanced portfolio of around 60% stocks, 40% bonds, and how that portfolio fared over time. It goes back more than 30 years, from the stock crash of 1987 all the way through the more recent Great Recession timeframe of 2008. And the important takeaway is the benefit of time again. When you start to look at 3 years, and certainly the light blue bar, which represents 5 years after each of those events, the strong performance of that typical balanced portfolio. As a closing note, let me just say thanks so much for listening. We certainly hope that some of these thoughts have been helpful. We know it's difficult as we all go through these uncertain times. You know, uncertainty is one of those things that it's never good in everyday life. It's certainly not good in markets. We understand that. But I really think it's why most clients hire us. They hire us to help them navigate not only the good times, but the bad. And so we'll continue to do that. And we look forward to seeing everyone on the other side. Thanks.